Hey traders, Akil Stokes here, currency analyst and Forex trading coach over at tradingpower.com, and welcome to another Forex market preview video. Last week I gave you guys a large video, just under an hour long. Got a great response, by the way, so I'm glad you guys loved it. Got to demonstrate really the different types of trading styles that we use and teach here at tradingpower.com. Today, I'm going to give you a much shorter video and focus only on a single pair. Now, before we get started with that, just want to do a little bit of house cleaning. For you guys that have been asking, yes, my dad is okay. I really appreciate the support and the love. He broke his collarbone a few weeks ago and has been walking around with basically his shoulder bone sticking out. So he finally had surgery. After being a little bit stubborn, and he's doing well. Went home to see him this past weekend. And also, last week I mentioned to some of you guys, or I guess all of you guys, about signing up for our email list. That way you don't miss the announcement of our next free webinar coming out. And a few of you said you couldn't find the sign up. There's usually a pop-up on the page, which I guess wasn't popping up. You know, me and technology don't miss. So here's what I want you to do. You can go over to tradingpower.com. I just made a few adjustments here. Click on any of the blogs at the bottom. You actually should be seeing the Forex market preview here by the time you're watching this video. And if you go all the way to the bottom, right, you're going to see a little deal here that says the Forex market preview, your trading edge for the week ahead. Just enter your email here. That puts you on our Forex market preview list. That means you get an email whenever we put out a Forex market preview video. And it also puts you on our list for free training, free webinars, free events, and things of that sort. We're not spamming you. We don't shoot you emails every day. Don't worry. We don't have the time to do that. But if you're interested in staying involved and just staying up to date on what's coming out here at Trading Power, make sure you're on this list. If not, you're going to be that trader that shoots us the email saying, hey, Akil, I just heard about this webinar that finished. Can I still get involved? And it's over. So now that we got that out the way, let's head over to the Euro Aussie this week. There weren't a lot of pairs I was too interested in. We had Friday was our jobs day, so we saw a lot of weird action in the market. And usually it takes a day or two for the market to really settle itself back in and show its true hand. Typically what happens on Friday is the jobs number comes out, the average hourly earnings, unemployment rate, non-farm employment change numbers. Market goes all berserk and crazy, right? We saw weakness in the dollar this week, and then that trickle-down effect with some other markets as well. And then no one wants to do anything on a Friday. London is basically already closed. New York is saying, let's just wait till the next week. So the market kind of consolidates sideways. And we'll probably see, I like to wait until Tuesday, or at least after the London session on Monday, to really figure out what the market is doing. But one pair that has my interest here is the Euro Aussie. And we're going to start on the daily chart. And I like starting on a daily chart again, just for that large perspective on what price action is doing. And this is the first part of our IPDE process: identify, predict, decide, execute. And you can see that recently price action has broken and closed above previous structure highs. We've been on a tear of an uptrend from down here at about 136.20s all the way to about 152.30s. And you can see we consolidated right here, right? Had a few trading opportunities, if I remember correctly. And then we finally broke and closed above our previous structure high. So we have the higher high, higher close, which tells my mind to think for bullish opportunities, where the path of less resistance is to continue higher versus continue lower. Now, when I say that, I don't mean that we can't see a pullback, right? You guys take me so seriously. Some of you traders will be like, well, he said we could continue higher instead of lower. So if we go one tick lower, that's a lower move. No. That means a violation of structure. So if you're familiar with our structure principles on how to read a price chart, new structure high, new structure low theory, and all that stuff, and then a violation of those levels is what I'm talking about as far as higher versus lower. But the question I want to ask myself, now that I've identified what the market is doing, is I want to ask myself, where is price likely to go next? And there are two ways I can do this. Now, I've been trading for a while now, so, you know, I look at charts for hours and hours every day, so I'm pretty good at identifying support and resistance levels. But I want you guys to kind of play a game with me. Look at the chart or load a chart up on your own. I'm trying to stretch this out to a point where we can all see it well. look at a chart or stretch a chart out on your own. And I want you to predict, where are the next places that you think price action can go to before we run into a level of resistance. So write it down, take a few seconds, maybe a few minutes if you need to, pause the tape. And it's a cool exercise to be involved. It's sort of what we do in the live room. It's a lot of, hey guys, before I give you the answer, or at least my opinion on the answer, let me give you guys a chance to be involved, just because you learn better that way. And if you're wrong, you're wrong. It's not a big deal, but let me know. All right, now that you got it written down, here are the two levels that really stand out to me. One is going to be right in this area. And it's not a specific price point, but they're going to be in areas. And this is an area where you can see we found resistance in the past. We've come back up. We've kind of found resistance right below there. We've broken through. Resistance turned to support, broke through, turned back to resistance, right? We've kind of flipped and flopped all over this area a few times. 1, 2, 3, 4, 5, 6 times recently. Another level is going to be right here because this is the previous level of resistance that comes after the one we just broke. Now, how many of you guys saw this, right? These are levels, again, anywhere in the 153s levels, right? 153.30 levels or 156 levels, right? If you were close to that level, give yourself a tap on the back. If you saw another level, doesn't mean that you were wrong, but you may want to, focus on these levels as well. And this is where our DSR tool comes in handy. Here's what I'm going to do to make my life a lot easier on a chart. And here's something you can use to make your life a lot easier, right? Go over to my indicator tab. I'm going to bring 2 of these on, right? Just to show you the different levels. And I'm going to go down through all the junk I have here. I'm going to find my dynamic support and resistance indicator. And I'm going to add 2 of them to my screen. I'm going to add a major and a minor. I'm going to start with the minor. I'm going to make the minor based off of, what I want to do here, 1 day. So this is going to find dynamic support and resistance based off the daily time frame, which is the one I'm on. Typically, I go to higher time frames. I don't use a minor too much, but for example purposes, we'll bring it on. And I'm going to change my strength to 13 because we're on a higher time frame. I want to see really important levels. I'm going to go to my next DSR, and I'm going to make this one a weekly. So this is going to show me support and resistance levels based off of my higher time frame. Once again, I'm going to make my strength a little bit longer here. I like Fibonacci numbers. That's why you see me bouncing from 8 to 13. The number really doesn't matter. But seeing how fibs are, you guys saw the fib video I did the other day, right? Seeing how fibs are very important to me, not necessarily as trading signals, but just understanding them in the world. If I could have everything kind of consistent as far as indicators, even time frames go, once we go down to the range bar charts, if I could have that consistent with Fibonacci, why not? So I have my 2 indicators on, my dynamic support and resistance indicator, 1 set for the daily, 1 set for the weekly, so a minor and a major level. I'm going to click OK and look what it shows me. Boom. Right? A nice visual representation. I'm going to erase, well, I'll keep my lines on. A nice visual representation of our structure. You can see the minor level identifies the key structure level back here. Doesn't get all of the little flips in here, but you can see a couple of small blue boxes. More importantly, however, is going to be the major structure, and that's this big red box. You can actually see this is a major minor overlap. So that's this big box right here up at the higher level that we were looking at. So we can certainly use this as a projection, a move back up to 155.50. And again, if you're going to be interested in maybe a smaller, the next minor level, it's going to be around this area of about, let's just call it 153 even. Now, for you guys that are interested in the DSR level, all you have to do is go over to our website, DSR Indicator, click the Products and Services tab, right? You can either just click it or go down to Software and Indicators. I'm going to click it because it gives me a chance to show you some other cool stuff that we have as well. And just scroll down, click on DSR, Dynamic Support and Resistance. Click here to learn more. There's a nice little video training on it, quick lesson showing how I use it, even though you guys just saw it. And go ahead and pick up a copy and make your trading life a lot easier. For you guys that are having trouble identifying structure, this is going to answer that question for you, give you a lot more confidence. And for you guys that have no problem identifying structure, just looking for something to make your trading life easier, maybe eliminate 5-10 minutes from your analysis, right? Time is everything. So, any way you can make your life easier on the markets, the better. So we have our 2 projection levels here, right? We have our minor level, which we're going to call 153 even, right? And we have our major level, which we're going to call 155.50. And so these are the levels that I would think price action is likely to go to next. Now, if we go down to, let's just go down to a 4-hour chart first. We're going to go down to an hourly later. Let's go down to a 4-hour chart and take a look at how price is moving. Right? Recently, price has been in a heavy uptrend, and you can see that we've extended, put in a little consolidation on the retracement before extending again. Little consolidation on the retracement, extending again, little consolidation on the retracement, right? You can see these slopes keep getting, right, lower and lower or higher and higher here. I don't know what the right way to identify slope is. Again, I wasn't a math genius, but we come back up and now we put in basically a sideways consolidation. So we went from retracement, retracement, lower retracement to a straight sideways consolidation before breaking out and putting up new structure highs. Now it looks like we're doing the same thing right here. And again, we're coming off a Friday, so we need to give this market room to really and time to show its true hand. But it looks like we're starting to consolidate sideways here. And consolidation leads to expansion, which means the next move would be a pop up to this level or this level. And looks like, I'm just eyeballing this, looks like if I take my Fibonacci tool out, let's go to the Fibonacci extension tool, and let's drag our Fibonacci extension from our swing low here, our previous swing low, to our most recent swing high, and back down. And look at that. We're going to have a 127 extension landing right on that minor structure level that we identified, about the 153 even handle, which, whenever I say even handle, is also a psychological number, right? So 2 levels for profit taking, or 2 levels for market prediction. Now the question is, how can we get involved? And let's go down to our 60-minute chart for that. There's a few ways we can do so. All right. Now you can see price action is close to putting in a double bottom right now. Right, close to putting in a double bottom. However, in my opinion, we have a large potential reversal zone. Our potential reversal zone really starts right here at these lows where we're at right now. However, it goes all the way down to the low of this spike. And I should say our first potential reversal zone. Technically, right, our potential reversal zone is going to reach all the way down here. But for simplicity purposes, we're not going to worry about this. We'll worry about this later on in the week if we retrace this far down. But the first kill zone that I'm looking for is going to be this yellow box right here. And the question is, how can I get involved? There's a few ways. Again, the most aggressive way is going to be either a buy at market on the open, or you can wait for a double bottom. Now, this isn't going to be the optimal double bottom because we're not really at the bottom of a key level of structure. It doesn't look like I don't know if we're going to see RSI divergence here. We're not over extended. So this may be a tricky one. What I think is a better opportunity, if it occurs, is waiting for a move deeper into our kill zone, right? I'm always a favor of deeper moves into our kill zone because that allows me to have more reward and less risk, which is always a good combination for me. So here's what we can do. We can look at maybe price action putting in a 1-to-1 measured move. So an AB equals CD pattern formation. That's going to come down right to this level, about 150.95. You can see we have another psychological number right here at 151 even. Once again, we can take our Fibonacci extension tool, swing high to swing low, and back up. You can see we're going to get a 1618 Fibonacci extension lining up with that level. And I don't know, maybe an 886. It's not going to matter too much, but we'll get an 886 there as well. So a minor Fibonacci retracement level as well. So again, if you guys saw the last video I did, it's under my trading blog on my personal YouTube page, but everything I put on there, I also put here on the Trading Power YouTube page. Just look under the Akil Stokes playlist. Another combination of using Fibonacci levels or using Fibonacci tools in a few different ways. So I think if we can get a move down to 151 even, not a bad area to look for a trading opportunity. Again, we're going to have a relatively small risk, right? All depending on how this sets up. Relatively small risk. And the reward, why am I going to green? I need to go to red. the reward is going to be pretty decent no matter where you're taking it. And obviously, we talk with traders in the live room each and every day about the different opportunities to take profits. Not everyone is the same. That's why every trading plan is different. Not everyone's going to be so aggressive that they're looking at, what was that higher level? Not everyone's going to be so aggressive that they're looking at 155 evens and saying, well, I'm going to take a trade here and buy it up to there, right? Not everyone's going to be that aggressive. If you are, God bless you, that's fine. But not everyone's going to be that aggressive. Some people may look for that first level, that 153 even handle level, right? That right there. You can see, still good risk reward. Maybe you're not even that risky. Maybe you're looking at, well, I'm not even sure if we're going to break out a keel. I just want to retest previous structure highs right here. Boom. Still a positive risk reward. And that's what we want to do as traders. We want to consistently put ourselves in areas where we're not accepting too much of a risk, and we're able to get a reward that's more than that. And that's, again, the 50% trader thing. Another trading blog video I put out was 3 trading myths debunked. And one is that you need to be a high percentage trader. I'm only about a 50% trader. I showed you guys our syndicate equity curve, I think a few episodes ago. We're only hitting at 53% for our syndicate. And we've just made a run of about 1,000 pips over the last 7 weeks. You don't need to win. You need to win. You don't need to win at a really, really high percentage. You just need to maximize your wins and minimize your losses. So interesting trading opportunity here. We're going to dig into this later on in the week in our live room and in our syndicate, of course, as it plays out. Again, these are just, higher time frame predictions. I don't know what's going to happen with the market. So if you guys are asking, hey, Akil, what's the ultimate way you're going to get in? What level specifically are you going to trade it at? I just don't know yet. My job isn't to predict that this far in advance. My job is to predict the area, and then it's to wait for price action to come down and then use that if-then thought process to get me to the trade. If price action does this, then this is how I react. If price action does this, then this is where I put orders. This is where I put stops. This is where I put targets. So it's all about waiting for price action to put in that move and then reacting to that move based off your rules, of course. So I appreciate you guys joining us. We're getting close to the 100,000 subscriber mark here on YouTube. So help us get there. Hit that like button. Share this everywhere you can. You guys have no idea how important sharing this video is. It allows people that haven't been viewing us in the past to come in, and for many of them, it changes their lives for the better. I can't tell you how many traders I've talked to that said, hey, I just stumbled across your video the other day, and man, I wish I would have saw this 2 years ago instead of, blowing $10,000 in the market. So it may not seem like much. It's a simple action. It takes a second, but just hit that share button on Twitter, Facebook, LinkedIn, YouTube, wherever you can share it at, do it. And if you guys keep doing that, we'll keep coming back each and every week, providing you with what we feel is the best trading content here on YouTube. And until then, or until next time, plan your trade, trade your plan. You guys have a good one. All right, traders. So I hope you enjoyed today's video. And if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempower.com website, or also take a look and you'll see more videos available for you. Have a good one.